Happy Thursday to you. I'm Marlon Bowling, your tour guide to the ag commodities. So glad to talk with you about what's going on in the ag markets today. I want to welcome aboard Mr. Ted Seifried, and Ted is with Zaner Ag Hedge. Now, he is located in Chicago, and I've been watching with high interest here today, Ted, and I'm sure you have too, that almost everything we look at has kind of gone in the tank today. Don't know what's with this general risk-off session here today, but what's your take on it?
Well, I'm going to say a couple things. We'll talk about export sales. They were really good, but you do get kind of the sense of a buy the rumor, sell the fact type event. Overall, President Biden met with Chinese President Xi, and the comments that Biden made, basically calling him a dictator, have the markets a little bit concerned that there might be an adverse reaction because of that. That's the best I can say as far as why we have this risk-off environment, because you're absolutely right. Look down at crude oil, down almost $3 today. Obviously, that pressure is affecting the soybeans as well. And those two things are the most Chinese-sensitive commodities or instruments that we have. So that's my best take on what we've got going on here. But like I said, we had export sales this morning. We knew the soybean number was going to be big. It was a question of how big. Is it going to be a record for a weekly sales record, which it was by a fair amount, actually. But now that we have that out of the way, the question is, well, what about next week? Are we going to see that big gaudy number again? And the answer to that is almost certainly no. It should be a decent number next week, but not almost 4 million metric tons. And that 4 million metric tons, while it's really good, all it really did was catch us up to kind of where we need to be for this time of year to get close to the USDA's average. So we really, really needed that. It's not something where we're going to walk away saying that, oh, wow, look at that big weak sale. Now we're going to say that the USDA is way too low on their export estimate. Yeah, that's not the case. Really, this just gets us to the place where we need to be to say, okay, that USDA's export estimate's believable as long as we keep up with good export sales in this very key, export window that we have for soybeans, which is, again, right now.
Ted, the thing that nags at me is the old saying that you usually top on bullish news. And man, we had a boatload of bullish news here this morning, and look how the soybeans are acting. We have the January contract down 25.5 cents right now. Goodness, the March contract down 26 3/4 at 13.72 3/4. That $14 mark is a long ways in that rearview mirror now on January.
Yeah, it really is. We're 42 cents away. You're also going to say, as we get closer to the weekend and we get more confidence on this rain event in Brazil from Sunday through Thursday, it's still there. And again, the closer you get, the higher the confidence is on that. I figured that if that rain event was still in the forecast, that we would be under pressure by the end of the week. Here we are. Again, this is a weather market, Marlon, so we will continue to watch these forecasts, every time we get a new one. But yeah, if that rain stays in the forecast, I think that takes a little wind out of the Weather Bowl sales. There's a lot of people saying that it gets hot and dry again after that event. Certainly that is a possibility, and that is what the forecasts are saying. But longer term forecasts, you trust them about as far as you can throw them. And a lot of times when you get a major rain event like this, when you get on the other side of it, those forecasts do start to change. So it could be interesting. Again, weather market, right? Weather markets are always fun to trade. They're all over the place. And again, I think this is a function of that and the risk off that we talked about.
Well, let's take a step back then and take a look at the corn price right now. We saw where the soybean market is over 20 lower. Let's see what corn is doing right now. December down 4 1/4 at 466.5. It's been there almost all morning long and hasn't really changed very much. Then on the wheat market in Chicago, we're down 13 1/4 on December. That would put us at 547 1/4. Only one tick from our low of the day there. That's 15 cents off of our overnight high. And in Kansas City wheat, similar action. You have December down 6 3/4 at 633. Believe it or not, it has bounced about 3.5 cents off its earlier low, but we're still, about 11 cents off of our overnight high last night. Spring wheat trade in Minneapolis, we're down a nickel at 730 1/4 right now on December. And in cotton, December down 20 points at 78.21 per pound right now. Well, as you can see, the plus signs are few and far between. But we'll take a break here, and then we'll examine what's going on in our livestock markets with a little help from this guy next to me, Ted Seifried. And that started out kind of grim, too. We'll see if it can climb out of that hole or not when we come back. Now, let's talk a little about the creatures, the animal markets today. Let's go to live cattle, shall we? See what's going on there. Well, the washout continues over here, too. We have December live cattle dropping $1.12 right now. February down $1.62 at $177.15 after a high of $178.57 earlier today. All right, so triple-digit negativism over there. Same thing in the feeders if you ignore the nearby November contract. Of course, that one, it's here we are about running out of time there anyway. January down $2.20 on the feeders. We're at $228.70, $2 off our earlier high today. March is down $1.57, and we have April down $1.97. So nothing bullish there at all on the feeders. Lean hog trade, well, we're lower across the board. Nothing like in the cattle, though. December down 60 at 70.45. February down 40 at 74.50. Ted, the market has turned lower on the cattle complex and the hogs today, even though the export sales were okay, but they did drop off from what we had last week, right?
Yeah, exactly. Export sales not helping today. And when we talked about risk off just a moment ago, this is where you're really seeing it, especially in the live cattle. And there's a lot of technical things going on right now. We had a 3-day bounce. We ran right into major moving averages in live cattle in the form of that's the 200-day moving average and also the short-term 10-day moving average for feeder cattle. Almost exactly identical look on the chart. 3-day bounce ran into that 10-day moving average. And now we're sort of failing. Now, the hope is that we can gain back some momentum by the end of the day and say, hey, this looks like, we had our initial test of resistance. We pulled back. Now we might be poised to go over it. But if we close poorly today, that's a really bad look on a chart. And you just don't have a whole lot to get warm and fuzzy feelings about in the cattle. I do think we've extended the losses to the downside more than we really should. But when you're in I hesitate to say broken market, but a fund-driven market, a money flow-driven market, we go past what fair value would be in either direction. So, that's the concern. So I think from a chart perspective, because again, these funds, that's what they watch, right? So I think today's a really important day for the cattle complex.
Well, it is. I'm sorry. I was going to say it is. And then we have the cattle on feed report that comes out tomorrow after the close. And it just seems like everybody just kind of wants to head for the sidelines here ahead of that report before it comes out. And then next week is a holiday week, and it'll kind of interrupt a lot of the schedules, too, when it comes to the movement of cattle to the packers and all that. Ted, great information. Thank you, sir. I appreciate that. I need to hop, but we'll talk with you again soon. Ted Seifried of Zaner Ag Hedge with us from Chicago here this morning.